Good morning, everyone. You are watching live Daily Market Outlook for Monday, 14th of May, 2012, prepared by Windsor Brokers. We're at the beginning of the new week, but with the old problems from previous weeks still pressing the most of the markets, as Greece as a currently main subject in the Eurozone still stays without government, and there is a serious threat of new elections sometime in June, as the leftists rejected the new coalition talks. According to the latest news, the Greek radical leftist leaders penned an invitation from President for a final round of coalition talks today, all but ensuring a new elections that he is poised to win. The Greece's political landscape has been in disarray for a week since an inconclusive election left Parliament divided by supporters and opponents of the 130 billion euro Eurozone IMF bailout, with neither side able to form a government. The President Papoulias must call a new election if he cannot persuade them to compromise. After a day of fruitless negotiations on Sunday, he invited politicians from the biggest three parties to return to the presidential mansion on Monday, along with a small leftist group, but an official from the second biggest party, the radical leftist Syriza group, said its 37-year-old leader Alexis Tsipras would not attend. The anti-bailout vote was divided among small parties, but has now rallied behind Tsipras, who emerged as an overnight sensation. Polls show he would now place first in the vote is repeated, a prize that comes with a bonus of 50 extra seats in the 300-seat parliament. As the uncertainty remains in Greece, as no governments, no signs of forming the new government, and still a strong argument with the two sides, one for the bailout and the other one completely against the actual austerity plan. And this is actually the main issue for the Eurozone, as some analysts already commented that likely scenario would be Greece by the end of this year coming out of the Eurozone, leaving the single currency as well as a Euro bloc, and the quite disappointing and pessimistic outlook is seen for the future of the Greece especially, and as well as Eurozone as a bloc of European countries. From the other side, from Germany, the German Chancellor's Merkel's party, conservative party, suffered a big defeat on Sunday in an elections in Germany's most populous state, a result which could embolden the left opposition to step up attacks on her European austerity policy. The elections in North Rhine-Westphalia, the Western German state with a bigger population than Netherlands and an economy the size of Turkey, was held 18 months before a national vote in which Merkel will be fighting for a third term. Just as a reminder, the results of votes in the North Rhine-Westphalia are actually the best and the biggest signal for the coming elections that will be next year. As said, the biggest and the strongest part of region of Germany is always the best indicator for the coming elections, and current blow for the Merkel's party could be quite big disadvantage in the coming elections. All these things pressured the single currency this today. On opening, we saw the small gap lower opening of the euro, as last Friday's closing just above 129 level that was seen as a break point. Now is lost, and the pair is still aiming lower, with our initial target at 128.75 being already tested, as the pair hit a fresh 14-month low during the Asian session. Sterling also remains under pressure. Some corrective action seen in the European opening but break below strong support band at 160.80.60 and loss of last week's low at 160.65 now keeps the more pressure towards the downside. The dollar yen is extending its recovery attempt of 79.42 low with the overnight brief break above 80 handle. Could be a signal of stronger action higher, as well as dollar Swiss that holds firm above 93. Our initial barrier that was cleared this week, last week, pardon, the brief breaks last week and overnights gap higher opening, now holding steady, and the prices during the Asian session ticked levels just a few points below our next target at 93.30. The crude oil remains under heavy pressure as overnights fall dipped 2 ticks below the previous low at 95.18, keeping the pressure more to the downside. Regarding the crude oil, the Saudi said that the top crude oil exporter, Saudi Arabia, pardon, said that they want an oil price of around $100 a barrel and would like to see global inventories raise before demand picks up in the second half of the year. This was the comment of Saudi Oil Minister Al Naimi given yesterday. The Saudi Arabia is working at bringing Brent crude prices to the levels of $100, and they see it as a great level. The kingdom, the OPEC's biggest producer, said it pumped 10.1 million barrels per day in April, its highest for more than 30 years, as it bid to meet growing demand and curb oil prices. The prices have stayed high in 2012 due to concern about disruption to global supply from US and European sanctions aimed at hurting Iran's crude export revenues and forcing Tehran to halt its nuclear program. The US and its allies suspect Iran is developing nuclear weapons, which Tehran denies. The oil minister Naimi said last week that producers were pumping enough to deal with the impact of the sanctions on the oil market. That was also impacted previously by a problem with Libya that is now more or less back into the market. Naimi reiterated on Sunday that producers were pumping 1.3 million barrels per day to 1.5 million barrels per day above demand, which is helping to build inventory. Inventories are at the equivalent of around 58 days of demand, but Saudi Arabia would like to see stockpiles build more ready for the seasonal increase in fuel consumption in the second half of the year. And Naimi said, despite all this, the oil is still under pressure, and more of this we'll see in our technical point. Also to mention that gold is again under pressure after a brief action higher during the past week that peaked at 1590 but stayed short of 1600 as initial resistance and round figure barrier, currently aiming towards the last week's low at 1572. That will open way for a more significant losses and basically extension of the previous of the longer term decline that is threatening now test of key support on the longer term at 15, 20, 30 zone that marks the double bottom. From today's calendar, that is not very big, just a few events that are due. The Australian, just a second until it appears. Australian home loans for March came in much better than expected. Minus 2% was consensus for the day compared to minus 2.5% of the previous week, while the overnight release for the monthly home loans was at 0.3%. Germany wholesale price index came again in slightly better than forecasted at 0.4. Overnight release was 0.5%, as well as Swiss PPI that was released a couple of minutes ago and came at minus 0.1% compared to consensus equivalent to the previous release at 0.3%. Still to come is the only one actually left for the days. European industrial production monthly release for March, which is due at 9 o'clock GMT, and slight increase to 0.6% is forecasted today compared to 0.5% of the industrial production in February. We're going to take a look now in technical part and see the movements of the major currencies and commodities in during the Friday and today. As said, the euro opened with the gap lower. In the night opening price was 129.01, and then steadied at the downside. 128.78 was the low. Hit overnight the 14-month low, and just few ticks above our main target on the downside, 128.75 low of January 2012, as well as low of January 2011. Very strong support at this point, break of which opens our next downside target, 128.57, low of 29th of December 2012, and break below these levels would be signal for further extension lower, as the pair broke below its multi-month range floor at 130, 129.50, and now has opened a fresh phase lower that might risk revisiting levels at 128.00 as round figure support, and the main longer-term bull trend line drawn of 118.75 low of 2010 through 126.22 low of 2010 and 2012, that currently stands at 127.62, ahead of possible extension down to the yearly low at 126.22 posted on 13th of January 2012. Negative tone on the daily chart sees potential of further extension higher, and remains supportive with no signals of any reversal seen yet, while the lower time frames are also in the negative territory. Studies are in the negative territory, and keep the downside. They favor the initial resistance, is previous support at 129.00 ahead of 129.50, where is the 20 days exponential moving average that basically maintains the downtrend from 2nd of May, when the price broke below this indicator, and keeps the upside limited along with the 129.55 and the 129.80 level, where is also the short-term bear trend line drawn of 132.82 peak that currently stands at 129.80, and basically only break above this zone would allow for some pause in the current downtrend and allow for some stronger recovery. Until then, the upside remains firmly capped and keeps the focus lower. Sterling dollar, a brief break below 160.65 last week's low, as well as a strong support band, and the break point actually at 160.80, 160.60 that hit so far 160.50, increases risk of further easing and further extension of the downtrend from 163.00 peak of 30th of April, as the pair's current recent action dented also 50% retracement of the move from 158.17 to 163.00, with negative outlook on the negative studies on the lower time frames, keeping the downside favored. As we see, the this morning's action higher was so far short-lived, limited just under 161.00. 160.80, 161.00 was our initial resistance. So far stays intact and keeps the upside protected ahead of possible further extension lower, as negative tone continues to dominate on the lower time frames, and the daily chart studies are losing momentum. That might risk further extension lower and test of a very strong support at 160 zone that marks main bull trend line of low of 2012 at 152.33 that currently stands at 160.20, as well as 61.8% Fibonacci retracement of 158.17 to 163.00 at 160.02 and 160.00 as round figure support. This is actually the break point for the pair, and the loss of this level would signal a further weakness, with 159 zone to come next as previous highs ahead of 158, also very strong support zone, and the higher platform of mid-April 2012. The dollar yen is in the recovery mode of 79.42, low of 9th of May, with the brief break above 80.00 last Friday, hitting 80.12, seeing a potential for further extension of this corrective action, as the pair remains in the strong downtrend of 84.17, 15th of March 2012 yearly peak that has so far retraced between 50 and 61.8% of the strong rally from 76 to 84.17, with low 79.42 reached so far. Short-term corrective action is now attempting, still unable to firmly break above 80.00, with overnight's dip being contained at 79.94. That is also the main short-term bull trend line drawn of 79.42. Ahead of more significant support at 79.90 and 79.80, higher platform, and the 55 days exponential moving average that for now maintains the short-term uptrend. That also, this zone is also marking a 38.2% Fibonacci retracement, and basically loss of 79.80 would delay the short-term bulls and allow for a deeper reversal. Firm break above 80.00 to open next significant barriers, 80. Pardon. At around 80.30, this is the trend line resistance, and previous highs at 80.55, 80.60 would break above this level, required to sideline the current larger picture bears and the signal temporary base at 79.42 and allow for a stronger reversal. As said, the daily structure remains still negative, with studies firmly in the negative territory, and the current brief attempt through 90 days moving average is still struggling to sustain gains here, with break here and the break above 80.30, as said, the main bear trend line of 84.08 peak required to avert immediate downside risk in favor of stronger corrective action. The dollar Swiss heads towards 93.30, holding just a few ticks below this level. This is a very strong resistance that marks the previous highs of mid-March, also that marks previous middle March of peaks, as well as 61.8% retracement of the larger down move from 95.93 to 89.30, with break of this point to confirm the higher lows at 90.00 and the latest one at 90.41, and allow for a further retracement of the fall from 95.93 to 89.30, with the 93.76 and the 94.00 levels seen on a break. As daily studies are entering overbought territory, this may signal some pause and some corrective action preceding fresh rally, but overall positive picture keeps the upside firmly in focus. Also, overextended studies on 4-hour chart are seeing risk of corrective action, but yet any signal of reversal, with the pair heading higher and all studies pointing towards the upside. As mentioned in the introduction, the crude oil is under heavy pressure this morning, as the recent action actually broke below the previous supports at 95.16, 95.18, and also lost the 95 zone support zone on the sharp fall that occurred in past couple of minutes. That will open way for further weakness of the this energy, as well as firm break below 200 days moving average, further weakening the structure for possible extension towards our next important level and strong support at 92.70, low of 16th of December 2011. That is basically our next target. As all technicals remain negative, the focus is now firmly on the downside. However, overextended studies on the daily chart and the RSI already in the oversold zone might signal some corrective action, yet no any signal of reversal on the larger time frames. The lower time frames now are again are in the lower time frames. Pardon, studies are in the negative territory, and keep the downside there focused on 1 and 4 hour set. 92.70 would be our next target. Previous lows, pardon, at 95.16, 18, 95.30 are offering initial resistance ahead of 20 days exponential moving average at 96.30, with the recent range top at 98 zone capping the upside for now, and basically only break above 98 would provide near-term relief for the oil prices. Also, quick look at the gold. That is also accelerating losses this morning after break below the previous low at 1572, currently 1570, and aiming towards next interim support at 1560, ahead of very strong support at 1532, 1522, double bottom of lows of September and December 2011, and slightly below 61.8% retracement of the larger up move from 1308 low of 2011 to 1920 historical peak of yellow metal posted on 4th of September 2011, and basically loss of strong support at 1522.32, as well as 1500 and 1480 higher low, is to signal more significant and stronger correction of the over 10 years strong uptrend that started from approximately $300 per ounce and peaked at close to $2,000 per ounce. Initial dynamic support is 90 days moving average on the weekly chart, currently at 1550. That will be initial target ahead of 1532, 1522 break, of which opens 1500 and 1478. In negative tone continues to dominate on the daily technicals, as well as lower time frames that are firmly in the negative territory, approaching their oversold zone, and possibly signaling some corrective action ahead. We still see no any signal as the pair remains, as the gold price remains in the steep descent in this morning price action. That was all for today. I would like to thank you all for attending our live session. We're back tomorrow morning at the same time, 7:00 GMT, with the latest news, comments, and analysis. All those that connected later and missed any part of the session, you can find the recorded version in the YouTube on the page called Windsor Brokers Forex. I wish you a nice day and very successful trading. Good luck.